Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader expert. In this video, I'll be analyzing the chart of GBPJPY, British Pound, Japanese Yen. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro USD, GBP USD, Gold USD, and many more. So let's get started. So this is a chart of JXY, Japanese Yen Currency Index, and here we can see that Japanese Yen is having some correction for the day. Okay. This was a big green candle, and right now JPY is a little bit weakish. A little bit weak and going for correction. And whenever we witness correction or weakness on JPY pairs, JXY chart, then we generally see GBP JPY, USD JPY, or JPY, all the JPY pairs going up. Okay, so this one is important. And if I take you the currency strike meter also, the currency strike meter is also telling us the same story. JPY is the second weakest currency of the day. So there is a possibility, okay, if you consider the JXY, the currency index chart, and the currency strike meter, then there is a possibility on the JPY pairs of an upside. Still, keep your eyes on the chart of JXY. In case there is a sudden change, then you must be knowing it from before. Now, if we go to the GBP JPY Pound Yen chart, okay, Pound Yen is better, I guess. Pound Yen chart, and you can see right now market is trading at 155.87. Okay, and this level is important because at 155.50, okay, and 155.50 is 155.60, this level we have a support, a horizontal support, plus we also have the additional support from the Fibonacci. Okay, this is a 23.6% Fibonacci retracement level. So combining these two factors, there was a possibility, and still there is a possibility of an up move from this particular level. So if you have a buy position on GBP JPY, then be on the trade, continue with the trading position, because overall the position seems to be good. Okay. But I would like to mention few more things here. Okay, let me remove the Fibonacci retracement level. Okay, so this level is good because of Fibonacci 23.6% retracement level plus the horizontal support. Clear? And right now market is going up from here. But one thing that we must also consider here is that market is trading in a downward channel right now. See, market is trading in a downward channel. The line at the top is acting as a resistance, and the line at the bottom is also acting as a support. So if we consider this thing, then you can easily see that market overall, the structure of the market seems to be upside. Okay, market is bullish, but the present trend of the market is towards the downside. That is a big problem. And most importantly, you can see that market is forming lower highs here. Market is unable to cross the previous high, and this is a clear indication of rise in selling pressure. So whenever we see a scenario like this, then the trade becomes very risky. If you want to take a high risk trade, then this you can go for it. But if you do not want to take any high risk trade right now, if you are not in a position to take any high risk trade right now, then you can skip this trade. Though things are in good position, but still you can skip it. Okay, because market is constantly forming lower highs here. Okay, and if market goes up, then undoubtedly 156.90, yes, 156.90, let me write it down, to 157 will be acting as a very strong resistance for the market. This is because of this level, this price rejection level, plus we also have the additional confirmation from the volume profile. So 156.90 to 157 will be a very important resistance for the market, and before that the trend line is obviously present, acting as the first the resistance. Okay, so these two are the resistance. This is the trend line is the resistance one, and this is the resistance two for us. And as I said, if you have a buy position beyond the trend, if you want to take a buy position right now, again you can take a buy position. But if you are looking for a very safe opportunity in the market, then you can skip it as well. So totally your decision. So whatever you do, please follow proper risk management, because see, this is my analysis, I can be wrong as well. Okay, so bye bye, take care, see you tomorrow.